in spite of that, ethanol volumes are pretty strong. And also, the distillery capex for all of the sugar companies are expected to be completed by Jan 2024. So, higher revenues from the distillery segment will also aid all of these sugar companies. So, which is why they expect strong earnings to happen in the next 3 fiscals.
Okay, thank you very much for that. Counting down to the open, and it looks like it's going to be a record high opening for our markets. The previous high was 20,110. And the pre-opening has currently settled above that, 20,127. So a record opening on the Nifty and the Sensex. The Nifty Bank too is very close to its all-time high levels, just shy of it by, perhaps close to about 0.5% if there is that positive opening. I think about 300 points away on the Nifty Bank from its all-time high. That's the opening bell, and the first stick on the Nifty is at a record high opening, 20,124. It's a start with a gain of 50 points on the Nifty. The Sensex straight away off the bat is up close to about 150 points. The mid-caps have made quite the comeback. The mid-cap index is up 0.6%. Very solid advanced decline ratio. Pull up the small-cap index yesterday. The small-cap index was up 1%, and it's followed it up with another 1% gain. So the pickup that we saw in the broader markets yesterday has only gathered steam, and today you've got the mid and the small cap universe outperforming the benchmark indices. Banks are not outperforming, but they're keeping in step with the frontliners. The Nifty Bank is up 150 points, a gain of about 0.3%. The big winners, well, many of the commodity names, so Tata Steel, Hindalco are the top 2 Nifty gainers right now. Coal India was higher yesterday. It's followed it up with another gain. You've got green on the screen when it comes to Wipro, Divi's Laboratory, Adani Enterprises. In the banking pack, it's Indices Bank, which is showing some strength. Just 3 stocks currently in the red, and again, they're trying to get back in the green now. So you've got flat moves on SBI Life, HUL, ITC, but again, absolutely flat over there. All in all, it's a very green-looking screen, and the mid-caps are doing quite well, 0.7% up now.
Yeah, I mean, no problems, right? I mean, back to up and up kind of days on the mid-cap and small-cap part of the market. So, just a couple of individual names straight off the bat. Bombay Dyeing is coming up with the biggest volume sort of led gain, which is 15% in the green. So 162 on Bombay Dyeing. And that's expected to be expected. Big volumes as well. Look at that at the bottom of the screen. Your railway names are coming up with large volumes as well. IRFC and RVNL, tentative, but they're up, 1%, 2% in that range. PSU banks, strong momentum there over the last 2 days. Bank of India is up 3%. So that's one I can spot. Mazagon Dock is, 2% higher, 2103. So just to give you a flavor of what kind of stuff is moving, Bajaj Healthcare, Ircon is up about 2% or so. Bombay Burma is up 5%, 1270 on that one. There is, of course, that is the holding company, so the reaction coming through. GMR Power is up another 6% or so. Stocks at about 38, 39. And Sona Comstar is up about 3% as well. So this is, just a broad kind of smattering of names which are moving up on decent and large volumes. IOL Chemicals saw a very large move yesterday. On the upside, it's down 1.5%, but soft, right, the word go, but nothing large at all. Actually on the downside, there's a bunch of names, but 0.25%, 1.5%, but none with any significant volumes, so as to speak. BHEL is down 1.5%. There was a downgrade we highlighted yesterday morning. Stock was, I think, down, and it's down another 2%, 126 on BHEL. SJVN is starting slightly lower. Piramal Enterprises, CG Power, but these are very small, nothing really large coming through at this point in time. Bombay Dyeing, by the way, is now limit up 20%, 168.6 is where Bombay Dyeing is at. NIIT saw a very large move yesterday on the upside. Oh boy, NIIT is jumping, and how? The last 3 days, actually this week it is up. It's up 85% this week. This week.
20, and today's 10% move, and that's how you get at 80%. So.
Yeah. We are in unusual markets, but this is unusual even by that standard. But that's the market for you. a big move and we're not done for the week so far. This is, I mean, 85% from the start of this week. That is Friday's close, so that's a really big one. Bombay Burma is now up 11% on the back of the big move you're seeing on Bombay Dyeing. Paytm is coming up with about a 2.5% gain, 858 on Paytm. There is Chennai Petro, which is up 4%. So more and more names coming through. Atul Auto is up about 3.6, 3.7%. Jupiter Wagons, I mean, that's again has been a daily 5% kind of a mover. That is up 5%. Religare, I think, saw a decent move, 3 3/4 of a move higher. Data Patterns, I think there is an initiating coverage note from one of the brokers. Data Patterns starts about 3.25% higher. There is Birla Cable, which is up 2.6% as well. Now we are kind of going down and volumes will thin out, but you get a sense of what's happening and the kind of names which are moving around. So this is the market open.
So,
right now.
railway stocks too have bounced back.
Yeah.
They fell sharply in Tuesday's trade. Yesterday, they were down about 2 to 3%. But today, names like Ircon, RVNL are higher in trade. IRFC too. These stocks are up between 2 to 3%. So the downturn that they had over the last 2 days has been arrested, and these stocks are higher in trade. One more stock, Suven Pharma, is up close to about, I think, 5 to 6%. Ekta was telling us earlier about how the cabinet has okayed 9,500 crore of FDI in Suven Pharma. Remember, Advent was looking to buy a 76% stake in Suven Pharma, and that has got the cabinet go ahead, and that stock has surged in trade. So keep your eye on that. And NBCC has signed some MOUs, and that's pushed up the stock 3.5%.
Okay, well, there's enough to keep us busy. It's a buzzing screen, buzzing market once again. Ashwini Agarwal is founder and partner at Demeter Advisors. He's joining us now. Ashwini, good to have you with us here. It's a pleasure, as always, on CNBC TV18 to speak with you. Ashwini, talk about mid caps and small caps. What else? We got a big break day before yesterday because there was a large cut, 3.5%, 4% single days, nothing small. What does that do to this uninterrupted move we've seen from the lows of March, Ashwini? And what's the advice there for that part of the market?
See, Prashant, I'm going to sound like a stuck record here, but I think there are pockets of the market in the small cap, mid cap space that are extremely overvalued. And investors need to be very careful about what they are doing, especially where valuations are extended. This is a story that repeats itself. So, for example, 2 years ago, we had, all the new age tech-led companies trading at, very, very high multiples, and we know what came to pass. Similarly, we saw that with real estate and infrastructure in 2007, and technology in 99, and so on and so forth. So, the point is that in the short run, nobody knows how high these things can go. But valuations in certain spaces are very, very stretched. It doesn't make sense, fundamentally speaking. So, one has to stay cautious. Having said this, it's interesting, what's going on, because there are pockets of value as well. For example, the PSU Bank pack, which has started finally moving, I think offers a lot of value for the simple reason that the banking sector environment is reasonably benign right now. You're seeing loans growth, you're seeing very low credit costs. There is some compression on spreads, but that's about the only negative. So there you might have some more steam. And then you have specific asset unlocking stories, of the type that you're seeing in Bombay Dyeing. I don't own any, but it's interesting to watch how the stock has done. I think there are opportunities, but I think investors have to be mindful as to where the value is and what they're doing and what they're holding.
So one pocket where you see value is PSU banks, Ashwini. Any other theme that you would like to highlight where you see value right now?
Yeah, Rima, I see value in pharmaceuticals. I think that's again an area where raw material price pressures of the past have abated, and I think business is on a very steady state. Valuations are quite reasonable. I also like downstream chemicals, again, a beneficiary of normalizing raw material prices and transportation costs. So on a year-on-year basis, you'll start to see growth come through in all these areas, and the China Plus One story is fairly intact here. Textiles, which have had a pretty decent run, is another area which looks quite interesting from a medium-term perspective. Short-term, I don't know, because these are volatile stocks, and typically, in a sell-off like what you saw on Monday, it's possible that textile stocks sell off as well because they've done so well. But I think if you were to take a 2 to 3 year view, given what's going on the China plus one angle, the FTAs with Australia, UAE already signed, and a couple of others in the pipeline, I think that could be reasonably interesting. Obviously, the risk to all this is that any export-led companies could be hit by a slowdown in the United States if that were to come through. But we've been expecting it for the last 1 year, and the U.S. consumer continues to soldier on. So I can't say whether that will happen or not. It looks that some slowdown is possible, but I think overall these companies that I've spoken about should still do all right.
Ashwini, just a counter to that point about the chemical stocks. I think you said that you find value in chemical stocks and they have been beaten down over the last 6 months. But and while prices of basic chemicals have gone up by close to about 15% in the last 1 month, the counter argument to that is that this is cyclical. Structurally, the chemical prices are still likely to be in a downturn because China is adding significant capacity. So the demand supply over a medium term is still not going to be favorable. How would you counter that argument?
So, Rima, I should have specified I'm talking about specialty chemicals, not the commodity ones. I'm talking about areas where companies are feeding into global supply chains or making complex products or products that require very sensitive environmental handling, including wastewater, etc. Pollution control norms have become reasonably strict both in India and in China. So companies that are positioned to do well on that front are the ones I'm speaking about. So on the commodity chemicals, you're possibly right. But I think where you have companies that are into APIs or into specific products going into the global supply chains, and that's one area where I feel positive about.
Okay, and you mentioned textiles, Ashwini. What specifically? I mean, the yarn makers, the apparel makers. What names there?
So I see the yarn side is more difficult to play because that's a commodity and that always has a cotton lead lag cycle. But I think anything in home textiles, anything in garmenting, those are the areas that I'm speaking about, because that's where a significant value addition is possible. And in both these areas, for some players at least, the domestic market is also becoming an interesting opportunity, both through their online presence as well as through branded retail stores. So, the Indian consumer will also take to these products over a period of time. And so the Indian sales may not be much today for some of the large home textiles companies, for example, but I think over the next 5 years, they will get to about 10% or 15% or somewhere there with very, very nice margin profile. So I'm talking more about, again, downstream value addition, whether it's by way of garmenting or by way of home textiles.
Where do you stand on autos? Autos went through a long period of a downturn, close to about 5 years. But again, in the last 12 months, we are seeing signs of a revival. Are we in an early stages of an upcycle in the auto stocks? If yes, is this an attractive entry point? How would you view the various parts of the auto side, the CVs, the PVs, two-wheelers, and even the auto ancillaries?
So, Rima, very interesting questions. I mean, I think the CV space is a very interesting one for me. And some of the auto component side that are feeding into global supply chains might be an interesting place to be. But on two-wheelers and cars, I'm a little confused because there is enough data out there which is suggesting that domestic demand still hasn't fully recovered. So over the last 12 months, we might have seen very large order books, and that was also driven by supply constraints. But these supply constraints are now finally easing out. And I'm not sure how strong the demand is likely to remain over the next 12 months once the pent-up demand has been fully fed. The competitive intensity in the car segment continues to be very high, and market shares are moving around. So that's an interesting place to watch. But the only player there, Maruti, where I have no position, is seeing a fair amount of challenge, even though they have a very interesting model lineup for the next 12 months. So it's something that I'm watching, but I'm not very confident about. Two-wheelers is more interesting, but I think rural demand is still something that I worry about. But I think that's one area where after, I would say, commercial vehicles, I could see some interest.
By the way, you said commercial vehicles. Ashwini, did you hear Mr. Gadkari's comments and then, of course, the clarification? And what did you make of it?
Yes. Well, these things will play out as we go along, but I think he was hinting more at passenger vehicles. I don't think he was talking about commercial vehicles in terms of the additional excise duty on diesel. At least that's my take. I could be wrong.
By the way, since we're on the topic of autos, electric theme, right? That's going to be a big one. The runway for growth is going to be, I mean, the potential is large, and we're moving. Inevitably, the move is happening, will happen, pick up pace at some point. What's the best way to get exposure to that theme if one does not have, that already?
Interesting question, Prashant. I really don't have a very good answer. I mean, if you look at the two battery makers, Maharaja or Exide, and again, I have no position there. They are making an effort. Exide, especially, you would have seen what they're trying to do, with a new plant, with a massive 6,000 crore investment near Bangalore. So let's see what comes out of it. There are some component companies that are feeding into the EV supply chain. That's one interesting way to play it, if you will. But also, this is a risk for the mainline auto companies because like I said, the competitive intensity is very high in the passenger vehicle space, and there is the new element of the EVs being available to the consumer and being preferred. So I don't know how all of this is going to play out, and there is no obvious way to play it via the secondary market right now. Is the sense I have.
Okay. Got that. We'll leave it there. Ashwini, it's a pleasure as always. Thank you very much. Lots, by the way, happening in the private space as well when we talk about, EVs and, a fair bit of investing activity there as well. Thank you. Thank you for joining us with that. You got 80 points, by the way, on the Nifty. I just want to highlight one name, and we highlighted this right at the word go, NIIT. NIIT has completely climbed down since we highlighted that it's up 80% this week. It's up 3.5%. It started with a bang, right? I mean, I think it was up over 11, 12%, but it's cooled off with that move. Many more, PSU banks coming into the mix now. So Bank of India, there is Union Bank and UCO Bank. Many others are coming into the fold in terms of gains, which we are seeing out there. Okay, Star Health and Allied Insurance is the first corporate on our radar today. There's some recent news flow. Ahmedabad Hospital and Nursing Association has raised concerns. They're basically saying that they've got issues with regards to services which the company is being able to provide. There's a bit of a standoff kind of situation there. Nilesh Kamli is Chief Financial Officer at Star Health and Allied Insurance. He's joining us right now to take some questions. And Nilesh, good to have you with us here. Good morning, Prashant Desai. Let's just start with that particular question. What has happened, and where do we stand now with regards to hospitals in Ahmedabad?
So as we speak, Prashant, we have already done discussions with the hospital associations. We have reached an amicable solution. We have had a good discussions, resolved the issues, and we should, continue with our relationship with the hospitals in Ahmedabad. Having said that, it's a continuous engagement. We deal with 15,000 hospitals across the country. Post-COVID, there have been increased inflation that is coming up. We have seen some hospitals not adhering to the tariff rates. Some medical protocols are not followed. So that's a continuous engagement on a pan-India basis, which we do to ensure that the customer's interest is protected. They don't have to use their sum insured and, go with the sum insured that they are having.
No, you're saying, Nilesh, that the issue is settled behind.
Yes, so we have already had a discussion. So there will be a second dialogue which will happen in the first week of October, and the issue will be resolved.
No, how many hospitals are you kind of partnered with in Ahmedabad before this issue came through, and how many are you associated with now?
So we have more than 100 hospitals in Ahmedabad. So we'll continue to work with all of them.
You know, there was confirm this if this is true, that and this is not just Star Health. So apparently insurance companies have kind of removed about 3,000 hospitals across the country from their panel. Is this figure correct? Over what time period has this happened? And you know, in the case of Star Health, what's the number?
So, we can give our numbers at an industrial level. It's very difficult to comment for us. So over the last 2 years, we have been issuing notices to more than 2,000 hospitals. Whenever we see that the rates are not adhered to, the medical protocols are not followed, we issue warning to the letters. We come on the table, discuss with them, and find the solutions. But in the last 2 years, we have suspended more than 500 of the hospitals. We reach a solution with some of them, but if they are not adhering to the conditions that we imposed, almost more than 500 hospitals we have discontinued in the last 2 years post-COVID.
500 hospitals in the last 2 years. And what is the single biggest reason for this? What's the biggest issue?
It is not adhering to the tariff rates, excess use of antibiotics, certain lab testing which are not required, hospital, the doctor visits, excessive billing, impersonation. We see some misrepresentation frauds also from some of the hospitals. So there are multiple reasons due to which we take this action.
Would this sort of 500 hospitals in the next 2 years, and is there a number going forward? I mean, is this a continuing exercise, and will this limit your sort of growth as well, Nilesh? What's the sense?
No. So, see, this is a continuous exercise. So when we talk about hospitals, there are consulting surgeons also coming to the hospitals, consulting doctors. So it's not exactly the the hospital as a whole. Some doctors can do something. So that's a dialogue which we continue to do. So there is no targeted number, but it's a vigilant exercise that we continue to do and manage the hospital network.
Kamli, just to put that 500 number in context with which you've suspended, your impaneling, 500 is as a percent. I mean, what are the total number of hospitals that you're associated with?
We are associated with 15,000 hospitals.
15,000. And of that, 500 have been suspended. Has there been any hit to your overall operations due to this?
No, absolutely not. So if the cash facility is suspended, the customers have the option of coming through the reimbursement route. What we do is we also engage with the customers, and that's the news coming out that even for the reimbursement we tag them as excluded hospitals. So only in the case of emergency the customers will be able to claim from if they are taking the treatment from these hospitals. But otherwise we try to avoid paying to these hospitals.
And getting back to that point about the Ahmedabad Hospitals and Nursing Home Association, when you've settled the issue, is there some sort of a monetary compensation that you've had to give? Or in terms of claim settlement, do you have to give any money to the aggrieved patients?
No. See, one thing is the patient does not get impacted in any way. It is an agreement between the hospital and the insurance company. The patient takes the treatment and he goes home. We have to then work with the hospital on what exactly are the charges, and we settle those things with the hospital. So we have reached an amicable solution. If there is an excessive billing which they were doing, they have agreed that they will not, control it or not do it, kind of a thing. So we have reached a solution.
Okay, let's come to the business side of things, the numbers, Nilesh. Now, when one looks at the growth, right, premium growth for the industry, the health insurance sector, Star Health's sort of premium growth has always kind of lagged the industry growth by a few percentage points. I mean, I have the numbers for the month of August as well. Can you take us through what should we expect from the company going forward? What kind of growth rates should we expect?
Yeah. So when we look at growth rates, we look at retail and group business, we are very strong in the retail business with almost 93-94% of our business coming from retail. For quarter one also, we had growth higher than the industry growth rate. Industry had grown by 18%, we had grown by 19%. On a month-on basis, there will be slight here and there, but we are confident that we'll continue to grow higher than the industry growth rate in the near future.
Which is what, Nilesh, if you can give us a projection, what do you expect the industry to grow by, say in FY24, and what will Star Health grow by?
See, we expect industry to grow in the region of 16 to 18% because many players have taken a price increase. We are confident that we'll grow upwards of 20%.
Okay. And on the point about price increases, are you looking at price hikes?
See, we had taken a recent price hike in our flagship product. It's a continuous evaluation. When we see that the loss ratios are touching a certain threshold, we go in for a price increase.
Okay. And how close are you to touching a loss ratio which would, necessitate a further price increase? Just trying to understand.
Yeah. So we have, around 5 to 10% of our portfolio which is touching those threshold levels, where we'll think about it and decide in the next 3 to 6 months.
It's an annual exercise, right, Nilesh? Pricing?
Exercise.
I think the last increase that you took came after a couple of years, if I remember it correctly. But there was a big chunky increase. Go on, sorry.
Yeah. So what happens is, say, family health optimize around 45% of our portfolio. When that product touches a threshold loss ratio, we have gone in for a price increase. So there are similar products like senior citizen product, the youngstar product. So these products are individually managed, and whenever the product touches the threshold price loss ratio, we go in for a price.
Okay. The last price hike was in May, right, of 2023, when you hiked premiums by 25% on an average for the family health plan, which is about 50% of your portfolio.
45% of it.
45. So for the balance 55% of their portfolio where there has not been a recent price hike, are you contemplating one?
See, I mean, if you go back in time, in July 22, we had taken a price increase for Mediclassic product, which is 6% of our portfolio. So that is what I'm saying. So Youngstar, which is around 8 to 10% of our portfolio, whenever it touches the threshold level, we'll go in for a price. So it's an ongoing exercise, basically.
Nilesh, sorry, just one last question from my side. That 100 hospitals that you said, right, that you partnered with another panel with, in Ahmedabad, can you assure us that all of them will be with you post the second round of negotiations, that is post-October? Or will they be, some will be off the roster in that sense?
See, though the association has sent a letter, the negotiation is happening as an association on the terms and conditions. But within that, if certain hospitals, are not agreeing or are taking some fraudulent measures, or so we'll take an individual call. It's not an association person. So very difficult to comment that all the 100 hospitals, but yes, majority of them will work with us in the near future.
Okay, all right. Thank you very much, Nilesh. Great speaking with you here on CNBC-TV18. Appreciate your time here as always. So that is, the management at Star Health with some perspective coming through. We're 90 points higher. So the march up continues. 20,160 is where we are at. Let's just take a look at the Nifty Bank as well, because that's been the stronger of the two indices. It is the stronger one of the two indices today as well. A full 0.5% gain on the Nifty Bank. And, the all-time high was made on the 21st of July at 46,369. So we are less than 1% away from that. Fingers crossed. We'll take a quick commercial break here. We'll be joined by the management at Shriram Finance to discuss the company's business outlook. Lots to talk about there. We'll also be, after that, joined by Vimal Kejriwal, Managing Director and CEO at KEC International, to discuss, all of their recent order wins and the outlook at KEC as well. Stay with us. Okay, welcome back. You've got the market, which, as I said, is up almost 100 points in the Nifty, so it's a good-looking screen out there. We have, as promised, the management of Shriram Finance now joining in. There is enough to talk about. There is the 2026 plan, talk about their branch network, AUM growth trends, etc. So let me welcome in Mr. Y.S. Chakravarti, Managing Director and Chief Executive Officer at Shriram Finance, who's joining in. Mr. Chakravarti, good morning. Good to have you with us here. Thanks very much. Before I get to the operational aspects of it, I just want to start by getting your sense on, what is the company kind of company's assessment of the rainfall deficiency? Because it's pretty stark in some states, especially down south, Karnataka, Kerala, Tamil Nadu. The situation seems to be very poor. And I'm talking about the cumulative rainfall from the 1st of June till now. Are you worried, sir? Is there going to be any impact on, your business, and in what way?
No, we are not worried right now. As of now, we don't see any impact of this shortfall of rain in these areas, and on our collections also. The disbursements also for the last 2 months have been really robust, and collections, particularly in this area, have been good. Probably places like your West Bengal, Madhya Pradesh, where there is still a deficit rainfall, we do not have much of a business. But south, we have not seen any impact as of now.
But will we see this? Because the deficiency is now, but will it show up in future months, etc.?
So I don't think so, but I would like to wait and watch. But I don't think so as of now. As I told you, the report from the ground level is very optimistic. So I don't think so.
Okay, and you don't foresee any stress in repayments also?
No.
Okay. So getting to your, so no impact on demand or even on the asset quality side due to the deficient monsoon as of now is the key takeaway. So getting to your Vision 2026 plan, you plan to, you're planning an AUM of 30,000 crore by FY26. You want to double your branch network, triple your housing finance AUM. Do you want to tell us a little bit more about this Vision 2026 plan, and what would the other ratios look like? Do you have anything in mind when it comes to what the asset quality should look like, your disbursement growth?
I'm sorry, what are the 30,000 crores? I don't get that number.
Okay. So Shriram Housing Finance, we understand, is eyeing a 30,000 crore AUM by FY26. Its AUM growth in the last quarter was about 9,500 crore rupees.
No, it's not growth. They are at 9,000 crores as of now.
They are at 9,500 and they want to hit 30,000 crore. So do you want to tell us this glide path?
I think the managing director of that company is better suited to answer this. But anyway, since I'm on the board, yes, they are looking at an aggressive growth, particularly in the affordable housing segment, and they've been in a sweet spot. They're growing well, and the portfolio is also performing well. So they are confident that they will be able to do that. Basically, they're also expanding their network. So next 2 years, yes, that is the target.
Got it.
Got it.
Mr. Chakravarti, let's talk about net interest margins for you, sir. Could you tell us, will we see a slight compression once again in the second quarter? What are you seeing out there?
Hey, our borrowing costs, incremental borrowing costs also have not gone up. I mean, there is an impact of 5-10 bips as of today. So that is not going to impact any of our net interest margin. It should be steady as we've seen in the first quarter. We don't see any dip from the first quarter.
So around 8.5% in that zone?
0.3, yeah.
And do you see potential improvement from here, sir, as we go forward beyond the second quarter?
So it depends on the market and the money market. So I don't think I would like to speculate on that as of now. We'll see going forward how the rates are. But I don't think so. We'd be happy to hold it at this level. Because I don't anticipate any rate cut also. So
So can't say for sure that borrowing costs have peaked. Cannot say that.
I mean, I don't expect a rate increase also. So I hope the rates stay where they are now, as of now.
Right, right. What can you do, sir? Can you, I mean, say, let's just assume, actually, the last month inflation number was a shocker. This month also, I mean, it's a little softer as compared to what was expected, I mean, for the month of August. But it's unpredictable. If broader rates in the system stay where they are or actually even move a little higher, what levers do you have? Can you sort of, increase lending rates in some of the lower yielding products? Do you have that flexibility to protect margins?
We do have that flexibility. Some of our on the used vehicle side, we don't want to put any more burden on the customer, so we will hold our lending rates where they are. There are certain few about 20-25% of my AUM portfolio actually can take an increase. So we'll see how we can balance that. But ideally, I wouldn't want to put more burden on my customer.
So while you've said broadly the demand has not been affected, could you give us a sense of what the growth was in the month of July and August?
Compared to July, we have disbursed about close to 800 odd crores more in August, and September is also going at a good clip. So, I mean, as a number, I may not be able to give you the exact number, but July to August comparison, I gave you 800 crores more.
And how was July, sir, in terms of disbursements?
July was about 10,500 crores.
Compared to June, higher?
It was higher.
Okay, so July over June is 1,500 crore higher, and August over July is 800 crore.
No, I'm sorry. July total disbursement was 10,500 crores.
10,000. Okay.
Yeah. August was about 800 crores odd plus more.
I mean, broadly, Mr. Chakravarti, the guidance has been 15% AUM growth, right? So we are on track with that?
We are on track. We are on track. Slightly higher.
Yeah. Sorry, slightly higher.
Yeah.
How much higher? Since you gave me that.
Let the quarter. I mean, I'll come back to you once the quarter is closed.
Okay, no, got that. But for the full year, we should work with that 15% kind of number. That's what you're looking at.
Yeah. You're on target.
And your net interest margin guidance was, I think, 8.5% by the end of this fiscal year.
Yes. So it should be around that, between 8.3 to 8.5. I don't think.
8.3 to 8.5.
Okay. Yeah. Mr. Chakravarti, one of the things we kind of picked up recently was the fact that, I don't know if you saw, but we had the management of Shriram Finance with us a few weeks ago, and they were talking about risks in the unsecured book for the industry as a whole, not for any one company. The RBI in one of its meetings with NBFCs, we reported that they were also kind of asking, why is this segment growing so fast? Could you tell us what is the growth rate in personal loans for you, sir? And what's the situation at Shriram Finance?
See, for me, my entire personal loan book consists I mean, our unsecured loans are less than 5% of our total book. One, two, we only give personal loans to my existing customer who has finished a cycle. So we don't do, as of now, we are not doing any market PL. So plus, on top of that, as I told you, my entire book is about 5%. Of unsecured book is about 5%. So we are, and we are seeing, we are not seeing any stress there, even in that 5%.
You're not seeing
any
stress
base
there.
Is small. So since the base is so small, any growth will be seen as 30-40% growth will be seen.
I get that.
Yeah. So we're not unduly worried about it. I know that we have to be cautious, but it's a small portfolio.
It's a small portfolio. And what is the rate of growth there, sir? Is it growing at a much faster clip as compared to other segments?
Yeah, it's growing at, as I told you, between 30 to 40% is the growth. But the base is very small. So as we add as branches, as we add this product into new branches, the growth seems high. But as I said, again, base is small.
Just one last question, Mr. Chakravarti. We've heard from auto companies, CV makers. We've heard from other finance companies in the segment. You as well have told us that this upcycle in commercial vehicles, which started perhaps in, December of 21, January of 22. So we're some time into it, but there is perhaps another 3-4 years of this upcycle. That's how this cycle works, and we're in the initial phase of this. Would you kind of agree with that kind of characterization, sir?
Yes, because I think we are seeing the beginning of the cycle. We are at the beginning of the cycle, and I think it has a good way to go. We are seeing demand across segments, across all segments of vehicles. So I think next 3-4 years is a good time for the manufacturers and financiers.
Okay, all right, got that. Thank you very much, Mr. Chakravarti. Appreciate you joining in, and it's a pleasure as always having you with us here. The stock's done well, and there is a fair bit of interest in the commercial vehicle space, both financiers and of course the OEMs themselves. The market is in a pretty good shape, I think. We've got the Nifty, which was knocking it, sort of being up 3 digits. It's up 80 points. So yeah, 20,150 on the index. Rima.
We've got another management waiting by KEC. They've bagged a slew of orders recently in the transmission and distribution business. They won orders to the tune of 1,145 crore rupees across various segments like civil, cable, data centers, FMCG. They've also secured orders close to about 1,000 crore rupees. The order intake this year so far has been 7,500 crore. Vimal Kejriwal, Managing Director and CEO at KEC International, joins in now. Mr. Kejriwal, morning. Rima here. So year to date, FY24 so far, order inflow has been about 7,500 crores?
Yeah, morning, Rima. I think you are absolutely right. We have got around 7,600 crores, which is roughly 30% higher than what we had earlier, last year.
And how would that position you in terms of full year order inflows? Because your guidance is for 25,000 crores.
I think we are in line with the guidance because we also have L1s of, more than 3,000 crores. So I think we are pretty comfortable, and with a tender pipeline of close to 1,10,000 crores, I think we should be able to reach our guidance.
Should be able. So how does business typically get impacted, pre-elections? Do we see a slowdown in the tendering process or the award of orders, the decision making? How are the next 9 months likely to be for you, historically, ahead of the elections?
So typically what happens is that just before the code of conduct comes in, or let's say the day the code of conduct comes in, from that day onwards, the formal ordering process comes to an halt in government, basically I'll say railways, and to extend the PSUs and all that. And that will continue till the elections are held. So maybe for a month and a half or whatever the time the code of conduct is there, you will not get fresh orders from the government sector. It doesn't impact the private sector or anywhere else. So that's one part on this. But typically, many times we see that there's a rush to award the orders before the code of conduct comes in. So wherever your L1, etc., there we will see a slew of orders coming in. As far as execution is concerned, there would be some impact on execution in case of orders which require, some help at the ground level with the district administration. You need a police help, or there's a ROW, or there is some other clearances required. At that point of time, you find the district administration doesn't want to, do anything which can create a problem for anyone. So there could be some minor impact on execution. But on the other hand, what happens is, like, we are doing a lot of water projects, or we are doing railway projects. There will be a lot of pressure from the client saying, why don't you finish these projects so that their impact can be there? So it works both ways. And with our current order book, I think we are pretty comfortable that it will not have any significant impact on our numbers.
Mr. Kejriwal, good morning. Prashant here. Sir, the 1,10,000 crore tender pipeline that you spoke about, these are projects which have been put out for bidding, and you placed bids and awaiting results, or this is visibility of projects?
So it's a mix of both, Prashant. These are tenders which have already bid where results are not yet out, and tenders which have already been issued or about to be issued. Okay, so it's a mix of both.
So to Rima's question, if we did not have these state elections, etc., and the general elections next year, would this tender pipeline, in terms of realizing some of this sort of orders, realizing some of this value as orders for you, would it have happened faster? Will this get a little delayed, or not really? As you said, it balances out.
I don't think it will have much impact, to be very honest with you, because I'll tell you what will get impacted will probably be the railway tenders and a part of the power transmission tenders. Okay, rest of all, most of it is private or international. So I don't see anything significant, any impact. No.
So railways and power transmission is where the most excitement is. And if you've been noticing, I mean, stocks and companies are just absolutely ballistic in this space. But you're saying that's interesting. You're saying if there had to be a bit of a push out, etc., it would perhaps be in these segments, right? Railways and the power transmission space.
Prashant, let me add one thing. On transmission side, we are seeing a huge rush and a huge push to award tenders. Okay, because I think with the way even the G20 went out, the renewable piece is getting more and more focused. And obviously, you know that a solar park can be put up in 12 months or 15 months or whatever time, while the transmission line and substation will take longer. So we are clearly seeing a huge amount of push happening on award of transmission line and substation tenders, before the elections. Very clear.
Yeah, no, that's very interesting. So again, kind of, it's a bit of a pull and push, but I guess balances out. Actually, I wanted to ask you on the thermal side, sir. We've discussed this before, right? And you said that we've not seen a new capacity being put up, so you don't need the lines then. I mean, if there's no new capacity, there's of course other work, maintenance, etc., which goes on. But in terms of a new cycle on the thermal side, are you seeing the first signs of it? Maybe a short-lived cycle, but it is needed because to bridge the gap between where we are now and when renewables will be completely able to take care of the demands. Are you seeing that?
To be honest, we have not seen much of it. I think the only one or two places where we have seen were where the plants were operating at a very low capacity because of economic reasons. Now, those plants are also operating at a higher capacity, and we have been, at a couple of places have been asked to, fast track the lines, etc., to these plants which were, I'll say on a slow track, okay? Because the capacity was not there, so those lines were not being needed at that point of time. Now, those plants are operating at a higher capacity. So I know of at least one or two lines where we have been asked to sort of fast track those lines to pick up the offtake of the power.
So existing capacity connected to the grid. That's
increase the capacity of the grid, or let's say one circuit is operating, please ensure the second circuit also is built in and all that.
But no, not a new kind of because we had that order from NTPC, right? I mean that announcement from NTPC for a big plant. So that kind of, I think, stoked a fair bit of excitement that maybe we are starting to see something here.
So Prashant, if you look at the timelines, I presume the power plant would probably take 4 years or 5 years. That has been the standard time. I don't know how much now they will do. A transmission line would typically take from 15 months to 18 or 21 months. So what we have normally seen is once the orders for the boilers and others are placed at the power plant, then they start looking at awarding the transmission line. So the transmission line will follow probably a year and a half later on.
So broadly, how have the raw material costs for you been in the current quarter? How is cost inflation?
So the costs had been very stable for the last, I'll say, 3-4 months. This month we are seeing some attempt by steel producers and cement producers to push the price up slightly, which is normal now that you're towards the close of the monsoon. But otherwise, I think they have been pretty stable. I think we are pretty happy with the way the costs have been stable.
Okay, and this attempt by the steel and cement producers to push through a little bit of a price hike, will it impact your margins? What's the price hike that they're asking?
No, I don't think it's significant. It will impact the margins because, this time what happened is if you look at the Q1 part of it, April to June, which is the time when the prices normally go up before the monsoon, did not go up. So actually we had some beneficial run, so that will get compensated. I don't think it will impact the margins, no.
And what's the extent of price hike they're asking?
It's still nominal, a couple of thousand, in steel, nothing significant.
So on track for 7% margins, sir?
what we have said is, yeah, 7 for the year. I think we are on track, yes.
You're on track. Got that. Mr. Kejriwal, great to speak with you, sir. Appreciate you joining in. And it's a pleasure, as always, having you here on CNBC TV18. Good conversation, as always. 683 stocks absolutely flat, but it's done so well. Actually, the power transmission cable stocks, I mean, all. For the year, KEC is up 40%. And it's had a last few very good years, starting 2020. We'll take a very quick commercial break here. Mitesh will be joining in with some technical trading ideas on the other side. So that's coming up. Focus on markets. Stay with us. Okay, welcome back. You've got, what, 40 points now. So there's a sharp climb down which is happening on the index. 20,100. We actually almost got to about 2,200 earlier. Let's see if that is the case for Nifty Bank. Oh, wow. I mean, the Nifty Bank is now completely lost everything and it's in the red. The day's high on the Nifty Bank is 46,153 and we're at 45,898. So take a look at that. The mid and small cap indices will also come up on your screen. There is a bit of a sell-off there as well, but 0.5% on the mid cap index. And I think the small cap index has also come off the day's high, but it's still got 1%. So not like the Nifty Bank, which is actually in the red. Mitesh is with us, so I think good time to get his thoughts on what's going on. Mitesh, I mean, this is not the one-way kind of day that there was some. It looked pretty good early on, but this is complete opposite. Go on.
Aside, Prashant, I think the start was very good, and I think the momentum is still there. But I think just that overbought situations sometimes do bring in intraday profit booking. As of yet, it doesn't look, some kind of a reversal happening at high levels. Though I think, as I highlighted, the Bank Nifty, that's 46, 180, 200 zone is an important one, and we got a high of around 46, 154. So I think, that's the hourly and the daily closing pivot. So till we get past that, I think there will be some signs of profit booking, but otherwise I'm pretty okay to hold my long position despite the fact that there has been some intraday declines. The new sectors which are showing breakouts are sugar. I think you were highlighting, one of our research analysts was highlighting the reports which have come out from the broking houses, and IT. So I think, that's where the focus could be. I would recommend a buy on Balrampur Chini. Disclaimer, I have personally futures position. It's also recommended to clients, so there's vested interest. But a good breakout taking place over here. So that's a buy with a stop at 420 for targets of 475. And LTTS is the other one from the IT pack that's breaking out of a sideways consolidation for last few days. So that's a buy with a stop at 46.40 for targets of 48.50.
Okay, sugar and a few IT names. Infosys has turned positive for 2023. It was the only large cap IT stock with negative returns so far. But now even Infosys has turned year-to-date positive. But let's, Mitesh, thank you very much for joining in. Let's turn our attention to commodities. Manisha is here with us on the big wall. Manisha.
Thank you so much for that. Well, I'm looking at nickel prices. Well, overall, metals actually have been slightly under pressure, but nickel clearly underperforming the whole sector there. We've seen prices decline by 3% on week. It is down by nearly 8% for the month. And for this year, we are down 32% when it comes to nickel prices. Well, we have seen the dollar index continue to trade on a higher side, a 6-month highs onto that one. The US inflation data has come in on the higher side, suggesting that you could be looking at least one rate hike now in 2023. And the higher rates could continue for longer is what's weighing onto the prices here. For nickel, essentially, it also has to do with the EV demand, which has slowed down, as we have seen in sense of numbers from China and Europe. And that has led to increase in battery stock with manufacturers there. If you look at the battery prices for the month of August, we saw a nearly 10% decline onto that one. Also, the lithium deposit that has been found in US now takes all the attention to the lithium ion batteries. So the nickel inventories have seen a rise because of that too. Also, when you look at the global nickel inventories, they are in surplus at the highest in last 10 years. So there is good production, there is enough stocks, and the inventories have been surging as well. Add to that the fact that the latest report suggests that Canada's Telon Metal Corporation is looking to increase production worth by 20 million. So markets are looking at supplies coming in from all sides. When you look at the prices in this year itself, we started with $30,000 a ton in the month of January. We are trading at around 19,500 right now, and the markets do believe that these levels will also not hold. So further lows is what can be anticipated for this one.
Thank you for that. And now let's get to the big movers of the day. Surbi is here with Bombay Dyeing still up 15%. Surbi.
Thanks so much for that. So Bombay Dyeing is going to monetize a big land parcel of 22 acres at Worli for 5,200 crores, which is close to like 2 times their current market cap. Now they're going to sell this land to a subsidiary of Sumitomo Realty. This is going to be done in 2 phases. In phase 1, they will receive 4,700 odd crores, and in phase 2, they'll receive 525 crores. Now on completion of this deal, they will be able to extinguish all their current borrowings and save on interest costs going forward. Their current debt is 3,642 crores. They will also be able to pay dividends in the future, and they will have a strong treasury balance to fund the future realty projects. The company has also said that the board has approved the development of unutilized land parcels, which has a potential to create 3.5 million square feet of residential or commercial space and a revenue potential of 15,000 crores. Additionally, 2.7% equity worth 92 odd crores change hands via block deals. If you look at the shareholding patterns, the major shareholders which hold more than 1% stake in the company is LIC with 1.39% and Madhuri Kela with 1.65%.
All right, Surbi, thanks for that. But, stay on, because sugar is the space, right, where I think DAM Capital has initiated coverage. It's interesting, right? They're basically saying that because of the production numbers and international sugar prices being high, etc., prices will stay high. I mean, retail prices will stay high. Tell us more, Surbi.
So that is one of their investment thesis, that the retail prices are going to be high. So let me start that they've initiated coverage on the entire sugar space with 4 sugar stock names in focus: Balrampur Chini, Triveni Engineering, Dalmia Sugar and Dwarake Sugar. All will have a potential upside of anywhere between 17 to 29% from their current levels. Now, as you said, they said that the demand supply is in the favorable zone. So, because of the El Nino conditions, the productions are hampered currently, and which is why the domestic sugar prices will be above 37 rupees per kg according to them. Secondly, they are betting on the ethanol play. So, the ethanol blending program is progressing well. The government has a target of blending ethanol of 20% by 2025 and 2026. Currently, it is at 11-12%. DAM Capital says it could be delayed. The target of 20% could be delayed by a year or two, but still not a threat to the entire sugar space. And thirdly, the distillery capex for all the sugar companies are on track, and most of them are likely to be completed by Jan 2024. So, additional ethanol volumes will result in better earnings growth in the next 3 fiscals according to them.
Thank you for that. Let's get into a break. On the other side, we'll invite Viren Shetty, Executive Vice Chairman at Narayana Health, to discuss their business.
Okay, welcome back. You got the market, which is now actually the Nifty also has got just 10 points left. So this is a massive move lower from the day's high. And on the Nifty Bank as well, we're down about, 50 points or so. It's largely flat, right? On an index of 45, 46,000, that's not very much at all. But the point is not being able to hold on to those levels. Now, we've got the management of Narayana Health. Viren Shetty is Executive Vice Chairman at the company, Narayana Health, to discuss what's next for the business. And what's next is a new logo, new branding. Viren, good morning. Great to have you with us here. Prashant this side. Congratulations on the rebranding exercise? I mean, tell us why you guys felt the need for it. What was the idea behind it, and what does it signify?
Well, there's the short answer and the long answer. The short answer is that we tried a lot to unify our name. We're known as NH in some places. We're known as Narayana Health in some places. Some places we're not even known by that. A lot of people just call us as Dr. Shetty's Hospital. And because we're getting into clinics and we're going to start a health insurance company and we wanted to unify the look and feel of the different properties that we own, we decided to unify it around Narayana. And so it'll be Narayana everything. Narayana Health being the mother brand, Narayana Clinics, Narayana Hospital, Narayana Cancer Care, Narayana Orthopedics, Narayana Heart Care, Narayana Labs, and eventually Narayana Health Insurance.
Viren, congratulations on the branding then. You know, we just had the management of Star Health, and they're sort of in a slugfest with many of the Ahmedabad-based hospitals and clinics. Do you have an opinion on that? Have you been associated, with your presence in Ahmedabad with what's happening with Star Health and the, issues that have resurfaced on social media about the claims not going through, etc.?
I have many opinions on Star Health. I also run a hospital in Ahmedabad. See, you always find healthcare providers and healthcare payers being on two sides of the spectrum. There never seems to be a common ground because one group is motivated to charge for the services, one group is motivated to withhold paying for the services. And the middle ground comes somewhere in the middle. In the end, patients lose out. One of the biggest motivation for us to launch our own insurance companies because we don't want this. We don't want to be in a situation where patients are denied the kind of care they get because of the plan that they have. We don't want to be in a situation where we have to sit and explain to patients that your plan, what you thought covered 1 lakh, 2 lakh, 5 lakh rupees, actually doesn't because it's got a whole bunch of exclusions. So without commenting specifically on one company or the other, I would say that health insurance as it is sold in India is not most effective. I'd say it's the equivalent of taking a credit card that only swipes sometimes, and even when you swipe it in a shop, it doesn't pay for the full amount. And that's just not how health insurance is supposed to function. So there are a lot of improvements that can happen, and I'm sure it's something they are working on. But healthcare providers are generally not happy with the attitude that a lot of insurance companies have taken.
Since we're on the topic we're in, where is that issue in Ahmedabad? Is it close to getting resolved?
I'm not sure. But the issue essentially boils down to a lot of the arbitrary disallowances and the unilateral pricing policy. You see, no two hospitals are the same in terms of the quality of services they offer and the kind of care that you get and the equipment that you use and how it is set up. And when an insurance company tries to do a uniform pricing for every single procedure, you're obviously going to get pushback from some hospitals who feel that this is unfair because they are spending more on better infrastructure, better quality, better medicines, and they're getting paid as much as someone else who may not be doing the same thing. Now, there should be a range of services at a range of price points, but that is hard to reconcile when you're trying to unify it at one single price.
Is this, as you see it, is this in health insurance industry issue, or is it about one company?
It's not, it's just health insurance as a model itself, and it's not specific to India. This is how it is throughout the world. There are always challenges when healthcare providers have one opinion and healthcare payers have another opinion over how much a thing should cost.
Maybe a common regulator, right, for insurance and healthcare. I don't know. I mean, if that is the that is a solution, or
no, you can't regulate this. See, the point is you have to accept that this is not a uniform thing that you're buying. This is not like a single iPhone, which is one model that or the whole country is buying. It's not one model of car. Every patient is different. Every case is presented very differently. You have to open yourself up to the chance that, see, the other one is insurance companies don't take the time to understand their patients and to understand the risk profile. Right? The amount of underwriting, the amount of work that used to happen before to screen patients has just gone away since the pandemic. They don't do medical screenings anymore.
Viren, you want to just get us up to speed on your insurance plans? Where is it reached? You were in talks with the IRDA to sell these bundle plans. You've incorporated a new company, Narayana Health Integrated Care. I think you've outlined a capex of 50 crore. This is what we know. What's been the latest update on this and your future plans?
Sure. Our idea for health insurance is one that combines a huge amount of healthcare services on one end, as well as providing a plan that covers comprehensive healthcare. So we call it as integrated care, which is outpatient services, screening, checkups, as well as eventually the surgery that you will require. If you sell a plan that only does surgery, you are doing a disservice for your customers because you're not getting involved in all the things that can be done before to prevent them from getting surgery. So this model has very different names outside. Sometimes it's called managed care, sometimes it's called integrated care. It has different names, but we haven't, for now, we're just calling it as One Health, where it's all provided in one platform from one provider. So we've got a lot of positive feedback from the IRDA. We've submitted our application. They've come back to us with a lot of feedback on how it looks. It's a back and forth process, but fingers crossed, sometime towards the end of this year, we should have positive confirmation.
Calendar year, end of calendar year or end of the fiscal year?
Calendar year is the hope, but more likely it will be by the time we're ready to roll this out, the end of the fiscal year and sometime next year.
This will be under the listed hospital company, or this will be separate?
For now, it is under the listed company. It will run as a separate venture. It's called Narayana Health Insurance Limited. And we will be rolling it out just in Bangalore in a very small trial basis for a very limited geography for the patients who are currently being treated by us. And once we scale up, once we figure out the right model of being able to manage patients throughout the entire care journey, is when we'll scale it up across the place.
So do you think this pilot project sort of that you're running in Bangalore, it will run for a year before you take a call to expand on a national scale?
Oh, it'll take longer than that. This is something that we said is services first. There will be a lot of moving parts. There's a lot of work that we're going to do in being proactive about getting people to take medicines, to get checkups, for us to be able to keep them out of the hospital. So it being more services intensive, it's going to be a while for us to figure out the right mix of services and not be in a position where we are too intrusive into patient care while not being hands-off enough that we're actually not providing much value to our customers.
Viren, it's a pleasure having you with us here. Thank you very much for your time, and good speaking with you as always here on CNBC TV18. Thank you. Well, that's Narayana Health with the perspective on a bunch of issues there, really. A good conversation. Well, the market's up 25 points. We're at what, 20,000 and just under 20,100. The Nifty Bank is come up. It was around 50 points 10 minutes back. It's basically come back into the green. So not staying down either. And the broader market, of course, is doing much better, even though there also from the highs there has been a little bit of pullback. It's a wrap on this edition of Bazaar from all of us here. Thank you very much for staying with us. Chartbusters coming up next.
It's a positive start to trade on the Lal Street. The Sensex and the Nifty trade near record highs. Metal, realty and auto stocks gain while financials lag a bit. Mid-cap index outperforms.
Bombay Dyeing surges over 15% after announcing the sale of its Worli land parcel for 5,200 crore rupees to Goisu Realty in 2 phases. Additionally, 55 lakh shares change hands in a block deal.
Sugar stocks such as Dalmia Bharat Sugar, Dwarkesh Sugar, Balrampur Chini and Triveni Engineering gain. After dam capital issues a buy call, the brokerage says demand supply for the sector is in a favourable zone and El Nino could further hamper production and keep sugar prices above 37 rupees per kg.
Stocks buzzing on news. Suvain Pharma secures a cabinet nod for a 9,500 crore FDI in the company for 76% stake. Bajaj Health gets an EIR from US FDA for API manufacturing facility in Gujarat. NBCC bags an 80 crore rupee sale order and IRCTC signs an MOU with the MSRTC to enable online bus bookings.
Star Health gains after clarifying over concerns surrounding cashless and reimbursement services raised by Ahmedabad Hospital and Nursing Association. Management tells CNBC-TV18 that discussions with Ahmedabad hospitals have reached an amicable solution.